Good afternoon, welcome, Happy New Year, and welcome to the first quarterly webinar of 2025. Today I'll be looking at Q4 2024. Prices have moved in motor and home insurance, reviewing the full year, going back a little further, and thinking about what might be expected in the coming year. First, a little bit about us, the Pearson Ham, our pricing consultants, and our mission is to help clients succeed through better pricing, whether that's through consultancy and pricing projects or providing market pricing insights. The objectives remain the same. It's to help improve decision-making and improve performance through the use of market insights. We have panels of real consumers, and it's their genuine details that we use to collect the prices that we use in our reporting. We have agreements in place with the big comparison sites in the UK, which enable us to do this. We also have a rotation of people and carry out thorough data cleansing to make sure that the information that we report is as accurate as it can be using this methodology. We are active in motor, home, van, pet and travel insurance at the moment, and looking at growing that range in other insurance sectors and other financial services sectors later in the year. And one of the things that we make sure that we do is use real, genuine risk details when collecting quotations. It's always real consumers. We're not making up any of the details, and we always have the consent of the websites that we extract information from. So we're not breaking any terms of use of those providers. Okay, so moving on. Firstly, we'll look at motor insurance, then we'll go into home insurance, and at the end, have a bit of a recap and think about what might be coming in the rest of the year. So in motor insurance, what happened at the end of 2024? So looking at Q4, we saw a further downward price movement of around 5.5%. So this was consistent every month in the quarter, with larger increases actually being observed in November and December. So where we may have thought that the price deflation would be slowing down slightly, we saw actually it increased as we got closer towards the end of the year. So we've got 2.2% coming through in November and in December, and overall a quarterly price movement of 5.5%. What does this mean for the previous 6 months? So it looks like we've now come down by about 10% over the past 6 months. So as I say, we did expect a little bit of slowing down of some of the rate of reductions that we have been seeing. And as we got into September, towards the end of Q3, the rate of reduction had slowed down a little bit. But as we progressed through into Q4, competition intensified and prices started to drop even further again. So this, just to remind you, is looking at the top average of the top 5 prices quoted on the comparison sites. So this is a view of what competitive prices in the market are doing. So over the past year, that means a year-on-year price reduction of around 16%. So we did see at the beginning of the year, in January, there was some quite big cuts, but in February and March, there were some increases following that. Since then, there's been continuous premium deflation. So every month since April, we've seen prices drop, and the cumulative impact of that is a 16% year-on-year reduction in competitively quoted premiums. Sorry, I should just say, if we have time, I will be answering some questions at the end. So please, as we go through, if you do have any questions, then please just log them in the chat, and I'll come back to those at the end if we do have time. So looking at how this is moved by some segments, so driver age is a good example to look at. So actually the largest reductions that we've seen have been for younger drivers. So we can see those under 26 and those under 30 averaging around a 17% price cut. So slightly kind of less than that, lower than that for the under 26s. And the bigger price reduction, the smaller price reductions coming through for those older drivers. So as we get up the age range, we can see the level of reduction is reducing. So it's really for those younger drivers where we've seen the biggest price reductions coming through in the year. And those obviously will be higher premium customers. Going back over the past 24 months, I think this gives a nice view as to what's been happening. So we saw all the way through 2023, quite significant premium inflation in response to the growing cost of claims and inflation that was being experienced during that time. It looks like enough premium was put through to get insurers into a comfortable position in terms of profitability, which enabled competition to return to the market and those growth strategies to be pursued in 2024. So we can see those price increases bringing up the average premium, and then that reduction more or less every month throughout 2024. So what we're seeing as a result of that is prices, although they've come down 16% last year, they're still 23% higher than they were at the beginning of 2023. Taking a bit of a longer term view, so this is going back to the beginning of 2020, so pre-COVID, we can see what's been happening during that period. And there are distinct phases that we've observed here. So there's the impact of COVID. Obviously, people are in lockdown, nobody is driving, there's a massive reduction in the frequency of claims. So insurers were able to pass on that saving to customers with reduced premiums. So we saw big drops in premiums. We then had the impact of the general insurance pricing practices, where there was a rebalancing between renewals and new business, which resulted in new business prices increasing significantly in January of 2022, followed by a bit of recalibration within the market as providers got used to their position in the new competitive landscape. What then followed was a significant period of premium inflation, and I think we're all aware of the causes of that and the rising general inflation, the cost of claims, which has been driving that up to a level where at that highest point, it was 46% higher than the beginning of 2020. Since then, things have been pulled back. We've seen increased competition within the market and prices reducing 16% year on year, which brings us now to a position which is 21.4% higher than the beginning of 2020. Looking at a sample of the main providers, so this isn't the full range of price movements that's been observed. This is for 10 of the main providers at a group level rather than individual product. So we can see that there have been some significant reductions for many of the large insurers, for most of them in the last quarter of the year. However, there has been some slowing down, and we have seen some price increases starting to creep through as well there. Looking at that trended over time, so over the past 12 months, so we can see actually where the largest quarterly price reductions were observed. The year-on-year movements are can be almost up to 20%. So I think what we're seeing is kind of a fairly flat, stable period earlier on in the year, followed by bigger reductions later on. And those are the biggest movers in the last quarter. Where we've seen smaller reductions, that's generally because those reductions had been put in earlier in the year, and they didn't need to continue as we got closer to the end. So the range of prices up to 20% price reductions. It's similar to what we saw. So they end up in the same place, just different means of arriving at that. Going back to the last webinar, what was I kind of forecasting might happen by the end of the year? So I expected there would be a slowdown in the rate of reduction that we were seeing, and we may end the year between 11% and 14% down year on year in terms of competitive premiums. What actually happened was, as I said, we're kind of 16% down. So those reductions continued at the same rate that we had been seeing previously earlier in the year, rather than the slowdown which I had expected to see. So it will be interesting as we move into 2025 to see what happens there, whether we do start to see that slowing down or whether there's still some fuel in the tank that would enable insurers to continue to put some of those rate reductions through and compete in the motor market. Moving on to home. So for combined buildings and contents, in Q4, again, we saw price reductions. There was a reduction in the quarter of 1.7%. So we have been kind of expecting things to start to come down a little bit, given where we had been, the premium inflation that we've been experiencing had slowed down a bit. And the biggest reductions here, so we can see there was actually a slight increase in November, a smaller reduction in October. Biggest reduction that we've seen is in December. So it looks like that ahead of this year, we've seen competitive prices start to drop. Looking at that over a 6-month period, we can see prices have come down about 1%. So although over the past 3 months it's 1.7%, then actually in the previous quarter there were slight increases. So it's been a bit up and down over the past 6 months, but quite a significant reduction being observed here in December. The annual view shows that picture of what's been happening within the first half and the second half of the year, and the differences there. So we can see the kind of the price increases in the first half of the year, bringing things up, and then that plateauing throughout the second half of the year, and starting to drop down as we've got right to the end into December. Again, looking at this over the course of the past 2 years, we can see that there has been a prolonged period of premium inflation in home insurance. So every month up to July 2024, prices have increased, and that, even with the reductions that we've seen more recently, means that prices are around 50%, 56% higher than they were at the beginning of January 2023. So again, it's significant premium inflation that we've been seeing. The actual rate of increase slowed down last year, and we've started to see some reductions flowing through towards the end of the year. So it'll be really interesting to watch that, to see what's going to happen as we move into 2025. Again, looking at a selection of main providers. So again, this isn't the range of increases and reductions that we've been seeing. This is what we've observed for some of those core providers within the market at a group level. So we can see while the average of the top 5 has fallen, most of the established providers actually have put through increases. So looking at the types of insurers and insurance providers that have put those reductions through, which are driving the average, they are some of the smaller challenger brands, and some of the main providers here have got a quite high share of top 5 quotes where we're seeing those price reductions coming through. So it's not necessarily those core main brands that are driving that average down, but we are seeing that they are starting, the rate of increase is certainly starting to slow. If we're looking at that trended monthly over 2024, then we can see that where the smaller price reductions or small increases were observed, these tended to follow kind of steeper increases earlier in the year. So I think they kind of prices had reached a level that providers were comfortable with, and then plateaued and flattened out in the last quarter of the year. Where we've seen those higher increases coming in, then again, I think it's where price movements have been a bit steadier. So we haven't seen as steep an incline in most cases. There are some outliers where the trend isn't quite the same as the majority, but I think what we're seeing here is steadier movements and more steady approach to premium inflation. But I think we're kind of ending up in a similar position with those price movements that have been observed in home. So again, what did I think was going to be the end of year forecast? So somewhere between an increase of 13 and 16%. What's actually come through is about a 12% year-on-year increase, so slightly below where we were. So again, reflecting the slowdown in the premium inflation that's been observed, and that end of year reduction in the average of the top 5 that's been observed in December. Moving on to contents only. So we're seeing a similar picture actually. We've got a kind of a reduction in July. Sorry, this is looking at November to December. So we've got the reductions coming through with that increase, with the kind of increase in November, and a reduction coming through in December. So bringing the overall to a 2.3% reduction for the quarter. Looking at that over 6 months, again, the trend is fairly similar to what we've seen for combined cover. So there was some ups and downs in Q3. We saw some ups and downs and followed by a larger down in December. So prices, and this is broadly driven by Q4, are about 2.1% down on the previous 6 months. And then taking an annual view on things, we can see a similar picture to combined cover, where it's a tale of two halves really. The first half of the year seeing that premium inflation, the second half we've seen a plateau, and we've seen some reductions coming through into December. If we go back a bit further, again, it's similar to combined cover. So we've seen significant premium inflation throughout 2023, continuing into the first half of 2024, slowing down, plateauing, and then starting to reduce. And we've seen that reduction coming through into December, which leaves us in a position which is 21% higher than 2 years ago. If we're looking at the kind of past 12 months movement, actually it's only 2.8% higher because of the upward movement that we've experienced at the beginning of the year. Again, taking a basket of the main providers, so most of them have reduced or maintained rates in Q4. There's been a couple of exceptions, but I think the kind of the trend is quite clear here, with some significant outliers in terms of price movements. Where we've seen the biggest reductions in the quarter were generally these were kind of followed by bigger increases in previous quarters. So people kind of backing out some of the increases that had gone in earlier. And where prices have remained flatter in Q4, this tends to be following a more steady approach to kind of that premium movement. So similar to what we've seen in combined cover. And again, in terms of forecast and actuals, I think, again, it's quite a similar picture. So thinking about increases between 4 and 5% by the end of the year, actually, it's coming about a 3% increase. So slightly below that range, but it's kind of relatively close. So I think we're seeing different movements in motor and in home insurance. In motor, we've seen almost a whole year of price reductions. So prices have come down significantly over the course of 2024. Still quite a bit higher than they were at the beginning of 2023, but significant movements throughout the year in motor. In home, premium inflation continued for a longer period than it did in motor. So throughout moving into the first half of 2024 before plateauing, we didn't see the same immediate move into price reductions as we did in motor, but we did see a slowdown and a plateauing of increases in the second half of the year. And towards the end of the year, we have started to see some reductions creeping in. So interesting to see what's going to happen in 2025 after kind of observing the end of 2024. So I guess that there are two big questions when we're looking at this year and what we can expect to happen. So those for me will be, can motor prices fall any further? And will we start to see home prices dropping? And the answers to these questions depend on several factors, and some of those are kind of listed below. So I think it's really around, have premiums reached profitable levels? Are insurers able to reduce further and to try and drive growth? Claims costs have been increasing over the past couple of years, but so are premiums. So it's a case as to whether premium inflation has done enough to counter the rising cost of claims that everybody's been experiencing over the past couple of years. So as I say, the cost of claims has increased significantly, and there are kind of several underlying factors which we're all very aware of, from Brexit to COVID to the war in Ukraine to general underlying higher rates of inflation, which have pushed up costs for insurers. So the cost of materials has gone up, the cost of parts has increased, the availability has reduced, labour shortages have extended the time needed for repairs, and also the length of time that replacement vehicles and alternative accommodation needs to be provided for customers. However, premiums have also increased significantly over that period. To address this, internal processes have been adapted to reduce the rising costs of claims as well. So there may be some benefits now flowing through from some of those initiatives. And we've seen motor prices drop throughout 2024. So obviously, many insurers are feeling more confident in terms of maintaining profitability in that sector. In home, the dynamics are slightly different, and there are slightly different risks to consider. So there's been less confidence there today in terms of those claims, mostly around frequency. So as well as cost, claims frequency is a big factor, and that's going to determine what happens in 2025. So in motor, frequency has reduced. So new working patterns, the speed restrictions that have been brought in some areas, New vehicle technology looks to be improving the ability to avoid collisions, and it's likely to be playing a part here as well. So there are kind of factors which are influencing claims frequency in motor, which have brought things down a bit. In home, we are seeing more extreme weather events, and just looking at things outside this week, then it's very clear what's happening and the potential impact of that. So, and given climate change, I think this is only going to get worse with the knock-on effect of subsidence claims and flood claims coming through based on these weather events. So, I mean, these are unexpected events, but becoming more expected. So I guess it depends on how well those have been built into the kind of the pricing models already. Will kind of impact on how confident insurers are feeling about the movements that they put in and what they're willing to do in terms of trying to drive more growth. So over the past couple of years, home insurance premiums have risen 56%, and for some insurers, if those increases have gone through in the right areas, this is likely to be enough to be able to support price reductions as we move into 2025, and we've seen that coming through already in December of last year. So growth strategies is something which can't be ignored here either. So it's not just about managing costs and maintaining that kind of profitability. It's about driving growth, and new business growth has been challenging since the GIP changes at the start of 2022. So last year we did see some more activity in the new business market and switching as prices dropped. Some of those deals becoming available to customers again, enabling them to move around. And insurers still have those growth strategies in place. Where possible, we could see prices dropping as we move into 2025. So motor, they've come down 16% they've come down 16% in 2024. So I think that still year on year, 23% up on 2 years ago. So we've also got the Ogden rate change impacting, so that could enable some further reductions if these haven't already been factored in. So there may be some way still to go for motor. So I think certainly for the first few months of the year, I would expect a bit of a kind of a slowing down, but prices to continue to drop before leveling off and then potentially moving up again. By the end of the year in motor, I would expect things to be broadly where they are now. There may be some downward movement followed by upward movement, but I don't see things moving too far away from where they are right now. I think we've reached a position where things are okay in terms of profitability, but I don't think that there's a lot further that insurers can go to drive that growth. In terms of home, prices are 56% higher than 2 years ago and dropped in December. I suspect this is the start of a more prolonged period of premium deflation as competition intensifies and insurers try to drive some new business growth. So home in 2025 may resemble motor in 2024. I wouldn't be surprised to see rates drop potentially by around 10% by the end of the year. I mean, again, it's difficult to predict, but I think we've got to a position where there must be some comfort in terms of profitability at this stage. And I suspect there is the desire to drive some growth and the ability to support that with some price cuts in home this year. So I shall look through quickly to see what we've got. in terms of questions. So I've got a question on what are the thoughts on the impact we'd like to see from new direct line products coming onto CTM? Any initial insight? So I think it's a bit early to say what to expect there. Obviously, there are kind of implications in terms of JIP and backbook business. It provides another brand for direct line. We've also got the kind of the direct line and Aviva deal going through at the same time. So I think it's probably a bit early to say. There's nothing that we've observed so far that would give you any much of an insight into what that's going to do to the market. And it's only on one aggregator at this time. So we'll wait and see how that goes. Do you have any trading insights you're able to share for January so far? Yes, so we have, as I said, we have seen prices continue to drop as we moved into January, both in motor and in home. Not quite to the extent that we saw in December. So I think the kind of the motor is probably around 1% down, home maybe about 0.5% down since the beginning of the month. But that's where we are, and things could change as we progress through that. Okay, I think that brings us to the end. So as always, if you have any questions or you would like to contact me, then please get in touch with me directly, Stephen Kennedy at pearsonhamgroup.com, and I'll be happy to have a chat. And I shall look forward to the next quarterly webinar in 3 months' time and see how things have moved as we have progressed through the early months of 2025.